Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This is all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. I think it's fair to say this commodity had been frustrating me for a while. Thankfully, that now seems to be coming to an end. However, as I have said over many weeks, it was only when I looked at my longer term monthly charts I was able to decipher a little of what had been going on and to give credit and warnings where they were due. So, if we look at my longer term monthly chart, we can see that the action since as far back as the low seen in August last year till last month built a sideways action. I noted this action 35 weeks ago and will expand on that part shortly, but I just wished you to see that this sideways action seems to be ending with October's combined monthly key reversal up and bullish engulfing pattern, and this month's small follow-on, though I'd rather wait to see a longer term chart from where we close on this month. Thus, we seem to have established a basing action around what seems to be a triple bottom formed over August 2024 to August 2025. Even now, I should caution you on the possibility of a false break higher, but as it seems likely it is now, then we have a primary target on this longer term chart up in the 1189 area, with a secondary harder to reach target in the 1224 area. In the way is the dark blue neckline, currently at 12 and 3/4, and some congestion between 1141 to 1232 from early to middle 2024. Back to my daily charts, and also 35 weeks ago I highlighted a bright pink July 24 to date rectangle. Well, is it to date? Let's say July 24 to October 2025, a rectangle pattern, which you can still see on my daily chart, and that's currently 977 to 1104 and 3/4. This pattern had been operational until 2 weeks ago, when prices punched up through the upper pink trend line, taking most of last week to stabilize over it. This is the original pattern that was formed by the actions I mentioned when discussing my longer term chart. Within this very large rectangle I've described over past weeks what has turned out to be a mid-August to late October head and shoulders continuation pattern. I also said 2 weeks ago, and I quote, it's a bit of a long one this one, we can now look at the whole August to date action as a possible bullish halfway hesitation. If that is to be the case, and it looks like it is, then the primary target has already been achieved, and that a secondary target up in the 1120 to 1125 area is on the cards. I've not marked the secondary target on my daily chart as we are so close to it right now. End of quote. Well, since then we have achieved the harder to reach secondary target, as well as earlier reaching both targets for the August to October double bottom. Next, I said 2 weeks ago, and I quote, last Thursday, the 23rd, we had a bow tie formation crossover of the short, currently 1104, short medium, currently at 1059, and medium moving averages, currently 1039. The moving averages entered disorganized, but they exited in the correct manner. Thus, in theory, between 15 to 20 sessions after crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. Hence, please look out for these between the 13th to the 20th of November. I should point out that the moving averages exited in a bullish manner as well. And that's the end of the quote. Well, today we entered that window, and I would now advise a little caution and to watch carefully the market actions over the next few days. Finally, and this came after looking at the bullish action on Winnipeg canola, such that I have drawn here a dark blue mid-December 24 to early August 25 bullish Andrews pitchfork. What is noteworthy about this pitchfork is the effect the dark blue middle time, which is currently 1141.5, has on the market over last week and this. It is a cap, a pierced cap today, but so far still a cap on a closing basis, and for now the market seems comfortable to slide along it, though it doesn't stop prices challenging it. Chicago soybean meal. Okay, so in 2025, so far, we've had a pair of descending wedge patterns plus a reverse head and shoulders pattern that have broken on the upside, resulting in a significant moves higher, reaching topside targets and becoming something that is now altering the whole strategic basis of this market, and which I will discuss shortly. In the immediate past, the market has peaked up over the significant resistance of the dark blue trendline extension to the July to September 2021 descending triangle pattern, which is currently at 315 even, and is now stabilizing over this trend line, such that it's possibly forming a base. Meanwhile, the top side has resistance, as I stated 2 weeks ago, and I quote, two others that need to be noted. The first is easy enough, it's the high for 2025 at 326.60. Interestingly, around there we have some other resistances, notably the 50% Fibonacci line for the May 24 to July 25 move at 326.20, plus some congestion at 326.90. So altogether, they make an overhead congestion area between about 326.20 to 326.90. Then above this is the 61.8% absolute Fibonacci line at 336.30, and I'll leave it at that. End of quote. Well, this is where we have indeed found resistance, and the question is simple. Does this resistance form a top or a bullish halfway hesitation? The answer is not obvious yet, though last week did look like a possible horn top, which this week has had that notion dispelled as we've pierced the congestion on the top side. We have not stabilized over this as yet, but we should start looking to the top side, and that next resistance of note, which I mentioned, is that 61.8% absolute Fibonacci line at 336.30, with congestion just above it at 338.10. It also raises the question as to whether we have a November-based topping action or a November-based hesitation that could be seen as a possible October to November-based halfway hesitation. In which case, we really need to start talking about levels up in the 360 area. However, that discussion will be for another time, if and when we have this halfway hesitation confirmed or not. Finally, this commentary would not be complete without my discussing a portion of my commentary which I have repeated for 127 weeks, so close to 2.5 years. It is the annual key reversal seen here at the end of 2023. I said, and I quote, "I only need to remind you once again of my words when I pointed out the Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023 and I've been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote, "If there is only one thing you take away from any of my musings, let it have been those words." End of quote. For 2.5 years, the shadow of that pattern has darkened the skyline of this market. Could it be? Could it possibly be that we're seeing the first signs of the light of dawn stretching through the darkness? I'm sorry if I sound vaguely poetical, but this bearish longer-term pattern has been such a cornerstone and companion to this market for so long, it's hard to imagine a time when it may end. But end it must. One final postscript. All these moves higher created a monthly key reversal up in October, the first such pattern here since December 2024. Chicago soybean oil. 2 weeks ago I said, and I quote, that's a long quote, I'm sorry about this, but with all the activity in the soybean complex, it was time I finessed this daily chart to show a better and clearer view of what is going on. Thus the key pattern here is the newly expanded, sorry for the pun, the newly expanded dark blue April to date ascending expanding wedge pattern. That's currently 5104 to up off the top of my daily chart. The lower trend line for this pattern has since late September a finessed nearby bright green uptrend, currently at 1590. It is safe to say that the market has pressed down below both the dark blue lower trend line and the bright green uptrend. Indeed, prices have pushed down and are looking at the gold long moving average, which is currently at 49.77. I carried on and I quote, "Additionally, if you look at the daily chart, you will see that since the peak of the market in late July, we have seen a new pattern emerge. Another wedge pattern, this time a bright red descending expanding wedge pattern. And that's currently 41.72 to 49.09. Since mid-October, we've seen prices push up over the bright red upper trend line, but stabilize and follow it down from above, and have formed a new, shorter purple downtrend, currently at 49.82. End of quote. Quotes. I'm sorry for burdening you with such long quotes, but it will probably be for the last time, as both patterns have come to a cusp, and I suppose unsurprisingly in some ways, we have had false breaks in both directions. I've repeatedly said, and I'm sorry there's another quote here, we have a cusp and something will have to give way, and soon, end of quote. Well, we reached that cusp and nothing has seemingly given way on the downside nor really on the upside, though the market does favour for a bit that side at the moment. What I can say is twofold. Firstly, in the immediate market, please pay attention to the overhead mauve medium moving average, currently at 52.26, as this capped prices in October, and also the gold long moving average below, currently 49.77, which whilst it is not perfect, it has helped bolster the second thing to watch for on the downside, and that is both the 50% Fibonacci line, the 38.2% Fibonacci line below at 48.95 of the significant March 2020 to April 22 move, and then above overhead the 50% Fibonacci line at 53.59 of the July 23 to August 24 move. These two features, the two moving averages and the two Fibonacci levels, seem to be better at defining the market right now, as I will after this commentary downgrade the previously mentioned wedge patterns.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.